Podcast Network Asia.
You are listening to First Metro Securities Philippine Stock Market Weekly podcast, where we feature timely and relevant discussions on the Philippine stock market and the economy in the hope of providing you investing and trading guidance. Here's your host.
As we turn the page on the financial calendar, it's the perfect time to reset the way we manage our money. One of the most important things you can do is to prepare an investment strategy for the year ahead. Welcome to the Philippine Stock Market Weekly podcast. I am Monneth Pangatungan, Market Educator and Business Development Officer for Visayas at FirstMetroSec Securities. Our mission is to equip clients and the public with essential investment knowledge, empowering you to make informed financial decisions. Today, we are sharing an investment starter pack for 2026. And to help us create this blueprint, I am thrilled to welcome our guest experts, Ms. Nelaine Cariño of Philequity Management Inc., together with Ms. Claire Oranda, Philequity's Research Analyst.
Thank you, Monneth. It's great to be here and discuss such timely topic.
Thanks, Monneth, for having us. We're excited to share insights.
Thank you, Ms. Nelaine and Ms. Claire. First on our list is the year-end financial audit. As they say, awareness is the first step to growth and change, and that applies to money too. So as we look back on the past year, what are the key things investors should examine in their portfolio aside from the usual return percentage?
Okay, so Happy New Year everyone. Start tayo with a review ng financial plan mo versus kung ano talaga ang nangyari. Sa simula ng taon, nag-set ka ng clear financial goals, kung magkano ang gusto mong i-save, i-invest, at kung saan papunta ang pera mo, no? So as the year goes, may mga bagay na tama yung nangyari. It is according to your plan, smoothly, pero meron ding mga hindi. So this comparison between what you plan and what actually happened can give you valuable insight sa financial habits at decision-making process mo. So ngayon, let's focus sa investments. Bukod sa performance ng portfolio mo, ask yourself, are you still on the right track? Align pa ba siya with your financial goals? Tama pa ba ang asset allocation mo? In terms of contributions, consistent pa ba tayo? Baka naman masyado kang nakafocus sa isang asset class and kailangan mo na siyang i-rebalance. It is important to reassess din ng risk appetite. So this year, naging volatile ba? Or last year, naging volatile ba ang market? Are you still comfortable with that? Kung hindi, baka kailangan mo ng strategy na hindi lang mag-grow pero magbibigay din ng peace of mind. So minsan, peace of mind comes from automating your investments. After all, consistency is one of the most important tools in investing.
Yeah, and also to add to what Nell mentioned, it helps to look at the big picture, like are we in a bullish or bearish market? And then the trend, is it moving up or down? Then you have to ask yourself why. And from there, you have to reassess what to do with your portfolio, then stick with it. And with that in mind, you would have conviction rather than just hope. On consistency in topping up, what we mean by that is considering the environment we are in now that's very challenging, with too much uncertainty and volatility, gradually adding to your fund instead of putting it all at once helps manage risk by averaging.
So agree ako on the reassessment of the current goals, if aligned pa ba siya for 2026, and also checking the current risk profile. May nangyari ba this year that made you risk-averse or risk-taker? And tingnan din if naging consistent ka ba. So most importantly, to look at the big picture so that you will know the opportunities. So sa pangalawang tanong, what's the biggest mistake investors make when they decide it's time to rebalance, and how can they avoid the costly trap of emotional timing?
Okay, this is actually a good question. Personally, there are times na nag-a-adjust ako dahil sa takot or sobrang excitement sa galaw ng market. So pag bumabagsak ang market, nagpapanik ako or nagbibenta ako kagad. Kapag naman umaakyat, biglang nagbabuy in. So usually nauuwi yan sa buying high and selling low. So para hindi na ako mahirapan, I just put my investment to mutual funds and let the fund manager handle it. But we have to always remember that time in the market will always be timing the market. So if you change your mindset and refrain your investments for the long term, then that should give you peace of mind. Yes, done ako this year, pero since I will not need my investment for another like 5 or 3, 5, 10 years, malaki pa yung chance ko na makabawi eh. And as mentioned earlier, sometimes automation gives you that peace of mind. Hindi na tayo tingin ng tingin sa portfolio natin kung ano yung kailangan natin gawin, no? Kumita ba ako kahapon? Kinabukasan, titingin ka ulit. Just automate a certain amount that you're comfortable with and forget about it.
Importante talaga that we don't base on emotion but rather base it on the strategy and stick to it. So malaking tulong yung automation and hindi ka talaga magbabay high and sell low. And now beyond the portfolio itself, is the year-end audit also good time to reassess things like emergency fund or high-interest debt?
It is advisable to build your emergency fund first. And if you have debt, better to clear it as well kasi you're vulnerable if you didn't build this first. If there's a tendency na kukunin mo yung emergency fund mo or yung pambayad mo sa utang mo sa investment mo, wherein there are risks involved in investment. So kukunin mo yung funds mo doon, baka loss ka pa. So ideally, dapat meron kang 3 to 6 months of emergency funds. Times 12, better, no? So that is equivalent sa monthly paycheck mo. So at least whatever happens, meron kang kukunan. Meron kang easily fund to pay all of those emergency or yung mismong debt mo.
Yeah, I believe it is also a good time to take this opportunity to reassess financial priorities and allocation of funds depending on your needs and wants, months or years from now. The goal is to be financially independent, but it doesn't happen overnight, right? And financial goals are definitely subjective and could differ from one person to another. However, at the end of the day, what we all want is to be able to sleep soundly at night without having to think so much about liabilities and expenses. That's why we need to have a fallback, and if it permits, make your money work for you by putting it in investment vehicles like mutual funds.
So totally agree on emergency fund and then paying off debts are important to do before investing wherein the money will work for us. Now that we have cleaned the house, let's look forward. Next is setting the 2026 investment blueprint where the goals meet action. So when constructing an annual blueprint, how should an investor connect life goals like buying a house in 3 years or retiring in 20 years to their investment choices?
Okay, this is very important. Check your timeline and also list down all your goals. So for short term, let's say 1 to 3 years maybe, it means you need a stable type of investment. So you can invest in conservative investments like money market or bonds. Let's say naman your goal is 5 years. You may want to invest in balanced funds, for example. So there is growth, meron din safety net. Then if you wanted for long term, 10 years for your retirement, then equity fund is a very powerful investment kasi mas longer yung magiging compounding interest niya in the future. So hindi dapat random ang pagpili ng fund, dapat purpose-driven. So that way, every peso has a mission.
To set the goals, then they have the corresponding time horizon and the suitable investment for each. So for the listeners who are reviewing their retirement contributions, how can they integrate this into their 2026 na blueprint?
Okay, the key is always consistency. So kahit maliit na monthly top-up to equity funds, after how many years, 15, 20 years maybe, malaki ang maiipon mo because of the compounding, no? So treat your retirement fund as a non-negotiable bill every month. Hindi siya optional. And for younger investors, mas malaki ang advantage dahil mas mahaba yung time horizon nila. So pwedeng mas mataas ang equity allocation.
So this is really pang long term. So finally, let's discuss navigating the year ahead, strategy and the outlook. So 2026 will undoubtedly bring its own challenges. So what do we expect in 2026?
Okay, so with too much risk and uncertainty, there was significant volatility in 2025, but a lot of it was priced in already, so we expect less of it next year. However, we're still cautious about other events, both locally and globally, which might cause a steer in the market. In the first half of this year, we saw renewed trade tariffs disrupting economies globally, which caused sharp corrections in global markets. And yet, the Philippines relatively remained insulated. However, in the second half, domestic risks emerged. Apart from major calamities, the flood control fiasco rattled the market and negatively affected the country's macros. So we saw below target GDP growth and depreciating peso against the dollar, among others. And these unfortunate events culminated on November 14 when a former congressman linked to the flood control scandal implicated the president. On that same day, the market dropped to 5,584, a level last seen in 2013, excluding the pandemic. But since then, the market reversed and has risen by up to 8.9% as of date. This recovery so far is supported by heavy local buying. That's even with continued foreign selling. And if we see a lot of foreign market buying next year, this may cause a bullish turnaround for the market. However, this remains to be seen. Due to the investigations into the flood control, GDP growth will remain subdued until second quarter next year. Also, largely driven by base effect coming from a higher base in the previous years from election-related spending. Although it should have bottomed out by then, so we should expect a rebound in the second half of 2026. Good news is, Santa came early as the seasonal rally has started later in November and this should have a spillover in January. Finally, we're expecting the full year earnings results to be released in February. Usually during this time, market reaction and recalibration happen.
So we have really experienced volatility in 2025. But in 2026, hopefully, yes, we get supported by the foreign market buying and take advantage on the rebound on the economic growth on the second half of the year. But how do we navigate 2026?
Yeah. So a lot of volatility from different types of risks, heightened uncertainty, threats and disasters, both locally and globally, have time and again tested the market, especially this year. And it was really challenging to catch the highs and lows of the market and spot signals to finally buy or sell, more so for those who are managing their own portfolio. But then opportunities to gain emerged as evidenced by different pooled funds managed by seasoned portfolio managers actually outperforming the index. While we remain cautious in these challenging times, we would still want to take advantage of opportunities in the market to gain more than just staying in cash. And however, this entails significant experience and time spent in the market. So if you want your money to work for you without having to watch the market all the time, you may opt to park it in dividend yield funds managed by our trusted portfolio managers. This would allow you to receive a portion of the company's earnings more than just capital appreciation, so double your earnings. And as discussed earlier, it is important to first be able to assess your current situation, time-bound goals, and risk appetite before investing.
So it's really great to leverage on the expertise of the fund managers. So thank you, Miss Claire and Miss Nelaine, for sharing your insights in today's podcast.
Thank you, Monneth.
Thanks, Monneth.
But before we officially end, may I ask for any parting words for our listeners?
Okay. I encourage everyone to invest as early as possible and give yourself the gift of financial freedom.
Ako naman, I've always liked the idea of high risk, high return, but it doesn't really always turn out well. So I'd say take risks that are worthwhile.
Thank you, Ms. Nelaine and Ms. Claire. And for our listeners interested in implementing your investment starter pack for 2026 with Philequity, you may check your FirstMetroSec account via website and click Funds. Look for Philequity under FundSmart. And that's it for today's episode. We're glad you could join us and we hope you picked up valuable ideas for your investing journey. Don't forget to tune in again for more market updates and learning sessions. This has been the Philippine Stock Market Weekly podcast brought to you by First Metro Securities, where we put your future first.
Thanks for listening to First Metro Securities Philippine Stock Market Weekly podcast. Don't forget to follow us to get first dibs on our new episodes. For more up-to-date market news and info, exclusive content, and the opportunity to connect with your fellow Filipino investors and traders, join facebook.com/groups/FirstMetroSec and be part of the First MetroSec family.
First MetroSec is providing this podcast as a general market commentary. Reference to any specific security, product, or entity do not constitute as an offer or a solicitation of an offer to buy or sell any financial instruments or to participate in any particular trading strategy. The statements, comments, views, or opinions expressed by the hosts are subject to change without notice, and First MetroSec is under no obligation to update, amend, change, or correct any of the statements, comments, views, or opinions expressed. The statements, comments, views, and opinions expressed by the guests are their own and do not necessarily reflect the view of First MetroSec. First MetroSec disclaims any liability arising from reliance on or reference to any information obtained in this podcast.
The views and opinions expressed by the podcast creators, hosts, and guests do not necessarily reflect the official policy and position of Podcast Network Asia, the hosts of the program, or other programs of the network. Any content provided by the people on the podcast are of their own opinion and are not intended to malign any religion, ethnic group, club, organization, company, individual, or anyone or anything.